Happy Wednesday out there, Team 42. It's your skipper here at Darius Dale to present our macro minute for Wednesday, March 20th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to see the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So today's key macro event is previewing the FOMC, plus more signs of stress in the Chinese economy. So the nuance there is at 2 p.m. Today, Eastern, the Fed releases its updated summary of economic projections, followed by the patented Powell presser at 2:30. In terms of market implications, we've been conditioning investors to prepare for effective hikes in the 2024 and 2025 median Fed funds rates in the dot plot. Powell could downplay any such hawkish revisions in his presser, but doing so would likely undermine the Fed's credibility. We expect him to use many words to communicate very little in the direction of incremental forward guidance. Both economic data and financial conditions warrant a hawkish revision, which is why short-term implied vols for stocks are pumped headed into the event. No change to the dot plot will likely trigger a Vanna squeeze higher in stocks as dealers rush to buy back short futures hedges. Lastly, a question from the community chat feature on the 42 Macro client dashboard affords us an opportunity to further educate Team 42 on our unique approach to managing risk. Refer to slide 33 for more details. So transitioning to 42 Macro dashboard there, as always, we'll wrap up with a question from our community chat. The question is the status and trends of global liquidity ex China. Reads Skipper, can you please give us an update on comments or update or comments in the lead-up morning note summarizing global liquidity trends ex China? It is important to market, but they can change. They're sorry, my apologies. The question's not written great. China is important to market, but they can change their policies within hours and make stuff up. So it'd be helpful to chart out U.S. and global liquidity trends ex China, as I believe liquidity is the main driver of asset prices. So our friend James here, or sorry, sorry for sharing your name, but anyway, so the answer here is published daily here in our leadoff morning note. Actually, Colin, if you can just put this on the screen here, where we show slide 45 from today's leadoff morning note. It's always the last slide in the leadoff morning note, which is our refresh global liquidity monitor. We refresh this 6 times a week for 42 macro customers. And as you can see here in the policy side of the component, we have the liquidity proxy separating inflation and policy there. And we have we built our liquidity proxy models for every major economy in the world. And recall that the 42 macro global liquidity proxy is the sum of the global central bank balance sheet plus global broad money supply plus global FX reserves minus gold. We have that same calculation done for every major economy. And so, as you can see here, the economies that contribute most to global liquidity are China as number one, US at number two, the Eurozone at number three, and Japan at number four. And as you can see, of those four economies, China is the only one with a liquidity proxy that's trending higher at the current moment. So that's something that we continue to expect. We expect China's liquidity proxy to continue higher, and it's primarily being driven by the PBOC's response to the economic stress in the Chinese economy, specifically the property sector, which represents 25 to 30% of Chinese GDP. So we did a big deep dive study on this going back a few months ago in mid-December, in authoring the call that China would front load a significant amount of policy support in 2024, which would ultimately be very positive for global liquidity. And as you can see, despite most major economies having their individual country liquidity proxies trending lower, Australia, Brazil, Canada, Eurozone, Japan, Switzerland, and the United States, the global liquidity proxy continues to trend higher because China's influence is dominating and outweighing the liquidity provision that we're seeing globally from other places. So this is something that, again, we have this refreshed every day in our lead off morning note, and once a week in our around the horn. And we obviously expand upon it and write about it, and use our fundamental research on the growth inflation to project inflections in each of these countries' liquidities proxies. But primarily, we're focused on the U.S., Eurozone, China, and Japan, because that's generally where most of the liquidity comes from. So we'll wrap it up there. Darius Dale presenting our macro minute for Wednesday, March 20th, 2024. Everyone have a wonderful day out there. Best of luck. We will catch you back here tomorrow, and actually catch me today at 4 p.m. Eastern. I will be joining our friends at Real Vision to anchor the daily briefing today after the FOMC. So definitely tune into that if you want our updated thoughts on U.S. Monetary policy. So cheers. Have a great day.